What is good, YouTube? We're back with episode 7, I think, of the only model that you will need. We are coming into the close. We don't have too many episodes left. This is going to be about the change in delivery slash the order block continuation, right? So this is going to be our entry model, right? In this video, we are not going to be going over putting everything together yet. That will be in a couple videos because I still want to go over the time frame alignment and what time frames you guys are going to use to enter and form swing points on, so then you guys can catch the continuation, the reversal, and so on, right? This is just going to be going over the change in delivery entry model with order block continuation if you miss the change in delivery, right? So right here we have what the change in delivery will look like. A bullish example and a bearish example. So if we take a look over here at the left, we can see that we are trading lower, and then we start to trade higher, right? So what do we need out of this move lower to then say that, okay, we can trade higher, right? We need a key level, right? So key level. We can put that on the bottom right. Now, it doesn't matter if this hits it or this hits it, right? Because it's going to be the same, okay? And I'll show you guys what I mean by that. So right here, let's say that we trade into that key level right here and we get this up close, right? This is not our change in delivery, right? Even if this candle closed above here, that's not our change in delivery. That's why it doesn't matter if the key level was swept here or if it happens down here, right? But then we have this up close and then we have this down closure taking out this internal low, right? And remember, we're still in that key level. Okay, then what happens? We trade higher and we trade higher, and this is where we get our change in delivery. Once we close above the opening price of the down close candle that swept the low, right? So in this case scenario, it would have been this open up here, right? It can be the series or it can be a singular candle. It doesn't matter. The change in delivery remains the same whether it's a series or a singular candle. That's why I said if this candle closed above this, it's not your change in delivery. It has to close above the series. Now, if it's just a singular one like this here, then it's just that single candle, right? So right here, we close above it. That is our change in delivery, and that is going to be the entry model with this model. Okay, so if we take a look over here at the right, and don't worry, after I go over this, I'll say what the order block continuation is. We trade higher, and let's say that we hit a key level. All right, so we hit that key level here, and we'll say it's buy side. We trade lower, and look, we close below here, but that is not our change in delivery. All right, we re-sweep this high. Now we get our change in delivery down here, right? Because we have a series of up close candles. Now this becomes our change in delivery, which is our entry model, right? Now let's say you're not confident in it yet, or you're not at the charts yet, right? You're just not here yet, and you want to see lower, but we've already had our change in delivery and we're trading lower, all right? Let's do the bullish example first. What is going to be the second entry that you can get, right? So let's say that we have a candle that trades into this down close, right? So we have this candle that trades into the down close here, right? And then we have a new candle that does the, ooh, what color is that? That does this, okay? So we have a new candle that closes up here. This is our second entry. Whenever we close above the down close that traded into the change in delivery. This is our order block continuation. We want to now see opposing candles support price to the objective. So in this case, once we close above the opening price of this down close, that's our signal to say, hey, this is our continuation model. Let's take an entry as soon as this closes. And if it closes like all the way up here, another thing you can do is just wait for it to open lower and then get in, right? Because we're not always going to, where is it? We're not always going to trade back into it, right? We're not always going to do that. Sometimes after we close above the continuation order block, we're just going to go, right? So that's why I say to just market enter your trades unless we close like extremely out of range of that order block, right? So this is your bullish example here, right? Now let's say our bearish example happens here, right? Now let's say we actually trade kind of higher, right? What happens here? Which one is our continuation order block? This or this, right? It's this, the series of up closes. Anytime that we have continuation order blocks, even if it's 3-4 candles, you have to see it close below that very first candle in the series. So this becomes our series, and we want to see price close below that like this, and then you take your entry to target lower objectives, right? So this is your change in delivery. This is your order block continuation. Now let's hop into the charts, and I'll show you guys what this will look like on the charts. All right. So we are here on Friday. We can go over two examples that happened here on Friday. First, the bullish, and second, the bearish example. All right, so what do we have here? We have a 4-hour fair value gap, and we have an SMT with this fair value gap with the ES. So let's head down to the 5-minute chart, fix this SMT up, and right here's that 4-hour fair value gap. All right. So if we're taking a look at this, we had 8:30 news drop right here. What happens at 8:30? Right? We swing lower, putting in manipulation with that SMT inside of a 4-hour fair value gap, and we close above these down close candles. Right? So this becomes our change in delivery, right? And you might be thinking, hey, well, we have this up close here and we closed above it, right? You might be saying, hey, isn't this our change? Well, we have news, bro. Like, you're not taking a trade before NFP. So anytime there's high impact news, also we didn't hit a key level, right? There's no key level in here. Anytime there's high impact news, you wait for that news to drop. You're not taking an entry 20 minutes before news, okay? So news drops, digs into that gap, puts in an SMT, has our change in delivery, right? Now we have a fair value gap here, okay? So like I said, we don't always tap that change in delivery, so this PD array should hold price to go higher, right? But what is our second entry? Right here. As soon as we close above here, you get in, put your stop somewhere down here, and target a 2R, right? So let's say you got in here, you risked off down here, and you targeted a 2R. Boom. You actually top tick the exit, right? You actually top tick that exit. Okay, now let's say you were bearish on this day, because I actually took shorts. That's why I'm down to go over the trade on this day, right? So aligning higher time frame with the lower time frame, we just took out external liquidity, right? So we took out external, and we have an SMT with all-time highs. Right, so ES took out all-time highs, NQ has not. We have a higher time frame SMT. Now, aligning that with the 1 hour and 30 minute, we need to make a case for us to go lower. What do we have? A swing point to trade from, right? We take out this high and we close inside. If we go down to the 30, same exact thing, which is where I took my trade. 930 does what, right? Like I said in my previous video, I think it was what, episode 4 or something. Key times, 930 is a driver, New York Open. 930 swings higher, takes out this previous candle's high, and closes back inside, right? So we have 2 points of a swing point here. Now if we head down to the 3-minute, boom, we can see what? We take out the high, which is right here, which is that 30-minute swing point. We can get rid of this because it's that hourly. And we have our change in delivery. Right? We have, oops, not SMT. We have our higher time frame SMT. We put in a change in delivery. Right? Now, why isn't this our change in delivery? It's because we haven't taken this high. Right? This, if we were to look for a change in delivery in this price like higher, it would be all the way down here. Right, because this is our series of up closes that took out a previous high, right? That's why this is not your change in delivery, and this becomes your change in delivery once we take out that high. I'm just trying to go over this so you guys can understand it like a little deeper, right? Now, let's say because I wasn't confident that we weren't going to go higher from here yet. Right? I didn't know if we were going to respect this or if we were just going to run through it. Now, what did I wait for? Well, we put in an SMT here. Okay, so we put in a second stage SMT. And if you watched my SMT video in this series, I always say to wait for that second stage SMT. Right, so we put it in right here. Now, what is our continuation order block? Right here, right? Not SMT. Our order block, continuation order block forms right here. Why not these up closes? Well, we take out this high right here and put in an SMT with this up close. So this up close becomes your order block continuation, which is where I get in. Now, let's say you missed this one. Okay, well, we put in another up close. All right, we put in another up close in this price leg lower. Close below it here, trade almost to it, right? We trade into the wick, but not the body. Like I say, just market enter once we put in an up close, right? Once this candle opens, starts trading higher, just get in. Like, you are expecting this to support price lower, right? And then we come down here and we run the sell side, right? So in this example, I showed you a bullish one and I showed you a bearish one. If you missed one or the other, right? If you missed the bullish one, you could have caught the bearish one, right? And I showed you how to align the 1 hour and 30 minute. I didn't go into the 4 hour because there was no 4 hour profile, and I don't really want to go over the 1 and 30 minute a lot quite yet because that's going to be in 2 videos. So let's hop into a couple more examples, and I'll show you guys a couple more examples. Alright, so here we are on the 4 hour chart, once again on NQ. If we go down to the hourly, we have a higher time frame key level, this 1 hour fair value gap. Now, I'm not sure if we put in an SMT, which I probably should look for real quick. Let's go to the ES. Do we have an SMT? Yes, we do. Sweet. Alright, so we put in an SMT here. Now, if we go down to the 30, SMT there, and we take out this previous candle's high here. So let's head down to the 3 minute. All right, what is our change in delivery? This candle right here. All right, why is this candle our change in delivery? That's the candle that traded into a swing high and got closed below after hitting a key level and putting in an SMT. Right, you're always looking for those SMTs because that can tell you when the move is going to happen, right? Now, we can say that this low is going to be our target. Boom. Right? So what happens? We close below it here, trade higher, right? Like I said, we're not always going to trade into it, but let's say that you weren't comfortable with taking it down here, right? What's your second entry? Boom. Right there. Once we trade up into it, you're in. Risk off right around here. You can go for that 2R. Right? And as you see, we actually just die off this day. Right? So, yeah, right there is another example, a bearish example. We put in a swing high here, right? That 30-minute high gets taken. Put in an SMT, close below and up close, trade close to it, close below the continuation order blocks, and bang, that's your entry. All right? So, yeah, this was a second example, and let's head over to a third one. Alright, so here we are on NQ once again. What do we have here? Higher time frame key level, 1 hour fair value gap, and an SMT right here. Alright, so we have an SMT with this candle here. Alright, so SMT there. Let's see, is there a SMT? Yes. Right, so second stage SMT there. All right, so first stage, second stage, higher time frame key level. What do we have here? Change in delivery. Closes below, right? Why is this our change? Well, we take out these highs here, right? We take out these highs and put in an SMT. Close below this up close, continuation lower, right? We didn't hit. Did we hit the draw yet? Let's mark this off. Let's mark this off. All right. No, we did not. All right. So what happens? We get support from this fair value gap here. Close below this up close. Taps, respects it, and continues to that hourly low. All right. So continuation order block all the way down here, which kind of sucks, but like you're not always gonna get an up close up here, right? Up here, you get your change. Down here, you get your continuation order block that tapped into a fair value gap and closed below. Taps it, continues lower. Now, you might be thinking, dude, am I ever going to get a 2R with a continuation order block? Bang, 2R, right? If you targeted that low, bang, 3R. Like, your RR still is good off continuations, right? It doesn't matter if you catch the top or not. If you can catch a continuation order block, dude, you'll be fine. Like, it's all good, bro, if you don't catch the full-on reversal. But once again, you look for that first SMT, look for that second SMT, and then, dude, you'll get your distribution. It's super gas. So, yeah, let's go over one more example. We can go over, we'll go over the gold trade that I took. Why not? Right here on Friday, okay? So, on Friday, took it bright and early. We had this low here. All right, what happens here? We take out these highs, close back inside, and we start getting distribution lower here at 6 a.m. We create equal lows. Let's head down to the 30. Let's mark this off again. What happens here? Consolidation candle. We had an SMT up here somewhere. I can't remember exactly where it was, but we had an SMT up here. We take out this candle's high inside of our key level, this 30-minute fair value gap, going down to the 3-minute. Boom, you can see it much clearer. All right, let's get rid of it. Oh, right there's our SMT. Right here is our change in delivery. And like I said before, just mark it in, right? As soon as this candle started popping up, I marked it in, put my stop up here, somewhere up here, right? And then what happens? We take that low, but if you were looking at the actual higher time frame, we were super bearish. So what does this become? Continuation order blocks, right? Taps it, continues lower. We close below these. What happens? Comes into it, continues lower, right? And then I'm pretty sure we just kind of stalled out. Yeah, didn't do much after that. But once again, right here, we close below, taps, and then we get this monster candle to the downside. How much did this move, actually? Like, if you put your limit there, holy, it almost moved an entire $1. Wow. Stop at the high, right? If you get a continuation order block, your stop has to be at the high. 2R. All right, boom. All right. So once again, right here, we take out that high. And if you remember, let's just turn this on. SMT, SMT. Change in delivery here. Continuation order blocks here. Taps it, continues lower. Another entry model perfectly right here. Like, this is what a change in delivery is. This is what our continuation order blocks are. This is what a change in delivery is. This is what our continuation order blocks are, right? So, yeah, that is how you guys will be entering off this model. So, next video is going to be aligning the time frames, and you guys might be thinking, dude, you only went over the 3-minute. Yep. And you guys will see why in the next video. So, hope you guys enjoyed this video. I'm out of here. Peace.